We've been recommending Bitcoin for 8 or 9 years, and it remains, in our view, a core asset. If we look at the price performance of Bitcoin, and we do have to look at price because it's a measure of its trust, it's following very closely previous halving cycles, and that implies Bitcoin should be around 100 to 150,000 in the near term, but could easily get close to 500,000 in 5 years. At 500,000 per Bitcoin, it would still be less than the value of gold today. And I think Bitcoin will surpass the value of gold, which would put the value much closer to $1 million per Bitcoin.
Tom Lee, co-founder and head of research at Fundstrat Global Advisors, has consistently emphasized Bitcoin's ability to outperform traditional assets like gold. In 2020, Lee highlighted how Bitcoin outpaced U.S. Treasuries and gold in year-to-date returns, attributing its performance to robust fundamentals. Recently, Lee made bold predictions, suggesting Bitcoin could reach $250,000 by 2025, citing several key catalysts driving this growth. These include the approval of spot Bitcoin exchange-traded funds, which have made Bitcoin more accessible to a wider range of investors, and the April 2024 halving event that reduced the supply of new Bitcoin, creating a supply-demand dynamic favorable for price increases. Lee also believes the current U.S. administration under President-elect Donald Trump will play a significant role in Bitcoin's future. The administration has proposed creating a national Bitcoin reserve by retaining approximately 210,000 BTC seized from illegal activities rather than auctioning them, aiming to support the U.S. economy and reduce national debt. Plans are also underway to establish a Bitcoin and Crypto Advisory Council, comprising industry experts, to guide regulatory policies fostering a crypto-friendly environment. Key figures such as Paul Atkins, a known advocate for cryptocurrencies, are expected to lead the Securities and Exchange Commission, while venture capitalist David Sachs has been appointed as the White House AI and crypto czar to develop a legal framework for the industry. These initiatives are anticipated to bring regulatory clarity to digital assets, including potential adjustments to tax rules for staking rewards and integration into existing tax and banking laws. Lee remains optimistic about the Trump administration's crypto-friendly stance, predicting that these measures will further boost Bitcoin and other crypto asset prices in 2025 and beyond. In his recent interview with Global Money Talk, Lee detailed his expectations for these developments and their potential impact on the cryptocurrency market. Stay tuned for key clips from the discussion.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Trump is one of the most market-friendly presidents ever, meaning he's going to focus very much on and rate his presidency based on how the stock market does. And so that's good for investors because if he introduces policies that worry markets, like deficits too big or tariffs too aggressive, he'll see it in the stock prices. I think the safest way to navigate this from our perspective is to focus on things that we all agree he'll pursue. Deregulation, pro-business and market-friendly, which means financials and small caps, but he does want to make the government more efficient and even do tariffs. So I think multinationals are a little more challenging, and industrials like defense would be challenging, and of course negative for healthcare and energy. From a bond market perspective, I think interest rates are initially rising because of concerns about deficit spending. But again, that's negative for stocks. So I don't think Trump nor his advisors want interest rates to go up dramatically. So I don't think interest rates are going to be the reason stocks underperform. And then from a crypto perspective, it's clear to me that he's pursuing a very pro-digital assets platform. I mean, he ran on the idea of Bitcoin potentially becoming a reserve asset. Almost all of his key advisors are large owners of Bitcoin. So I think Bitcoin is going to be very central to the White House initiatives over the next 4 years, which of course is positive for Bitcoin. To us, Bitcoin represents one of the most trusted assets in the world because we're living in a digital age where AI and cybersecurity threats have really undermined trust in both dealing with each other, but also in financial institutions. And that means the price of Bitcoin represents the value of trust in a trustless world. We've been recommending Bitcoin for 8 or 9 years, and it remains, in our view, a core asset. If we look at the price performance of Bitcoin, and we do have to look at price because it's a measure of its trust, it's following very closely previous halving cycles. And that implies Bitcoin should be around 100 to 150,000 in the near term, but could easily get close to 500,000 in 5 years. At 500,000 per Bitcoin, it would still be less than the value of gold today. And I think Bitcoin will surpass the value of gold, which would put the value much closer to $1 million per Bitcoin. I think Bitcoin is something you don't want to own if you believe there's another way to measure trust. I think that's many years away because even the United States may potentially own Bitcoin as a reserve asset. That is a huge endorsement of the security of the Bitcoin blockchain.
In terms of the other coins, are you as bullish? Anything that other than Bitcoin that you're as bullish? Ether or Solana, some of the other bigger coins?
We've followed crypto for 7-8 years now. And we've seen many what they call altcoins come and go. I think the most important thing to think about if you're going to buy altcoins is, number one, if you're investing in an altcoin, you should measure how useful that token is or the size of the community. By that measure, Ethereum and Solana look like very credible blockchains, layer 1 blockchains. But the second thing to keep in mind is that when crypto is in what they call crypto season, when it's in a bullish cycle, the altcoins do very well. So if Bitcoin can go from 90,000 to 500,000, many altcoins will do better, but those are not investments, those are trades.
Lee, co-founder and head of research at Fundstrat Global Advisors, leads an independent equity research firm renowned for its proactive approach to cryptocurrencies and digital assets. Fundstrat provides a dedicated digital asset strategy, delivering comprehensive market analysis while offering consulting services to help global companies navigate the complexities of cryptocurrency economies and technologies. Although Fundstrat primarily operates within traditional finance, it has long advocated for including Bitcoin and other leading cryptocurrencies in investment portfolios. Initially, the firm recommended allocating about 1% of portfolios to cryptocurrencies, focusing on Bitcoin, Ethereum, and Solana. Today, this recommendation has increased to 5%, reflecting the significant price growth Lee anticipates for cryptocurrencies in the coming years. Fundstrat's forward-thinking approach highlights its commitment to embracing the digital asset revolution, bridging the gap between traditional and emerging financial ecosystems. Let's return to the video for more insights into Lee's predictions and the evolving crypto market.
I generally don't try to advise people on allocation because how much someone puts into bonds, and bonds are less risky, depends on their tolerance for risk and their age, and also how much money is in the stock market versus their total net worth. So those are 3 variables that I don't know, and that's why we don't usually advise an allocation mix. But I can say that we've recommended initially, when we first wrote about Bitcoin, that investors put 1% into Bitcoin. And if they didn't sell that Bitcoin, even with the stock market gains, it's now 40% of their portfolio. And if our second suggestion was 0.5% into Bitcoin and 0.5% into Ethereum, and that is now 80% if they didn't rebalance. Today, we're recommending at least 2 to 5% into Bitcoin, but that is as a commodity or alternative exposure, because if they invest 2 to 5% of their money and somehow crypto goes to zero, they didn't lose everything. But if Bitcoin reaches some of the targets we expect, then Bitcoin could end up becoming 50% of their portfolio again. There are many people who are bearish because they say baby boomers are going to take money out of the stock market as they retire. And as you pointed out, baby boomers have been doing this for 8 years, actually close to 28 years if you take the oldest boomer. And if we look at the last 28 years, the stock market has gone up. The reason it's gone up is that the baby boomers control over $120 billion of household net worth. The interest income from that is close to $7 billion a year. Sorry, $7 trillion a year. It's 120 trillion and 7 trillion. I may have used the wrong numbers. The US GDP is 25 trillion. There is so much money saved by the boomers. If the stock market goes up 20%, well, they just made 30 trillion, okay? They're not going to consume their savings. That's a very big misconception. In fact, as you know, household net worth in the last 28 years has exploded. So the boomers are spending a lot of money and living very well, and that's helping the economy, but there's still a lot of money left. And that's going to be transferred to millennials over the next 20 years. There's many people who can model this simply, but the median estimate is roughly 80 to 100 trillion will be transferred to millennials over the next 20 years. The average millennial will be somewhere between 35 and 45 when they receive this money, and that's going to be very stimulative not only for the economy, but will also be stimulative to equities because they're more likely to own stocks than a boomer.
About when do you think the bulk of this transfer is going to take place, or is it sort of in the process of happening right now?
I don't know if someone should try to model that precisely because we don't know what the mortality is going to be and we don't know the composition of portfolios. But if someone were to just make a simple observation, for the last 15 years, every single bear has told me the same thing that you just said. Baby boomers are retiring. It's a headwind for the economy. It's going to be a headwind for stocks because they're withdrawing money. And if they acted upon that, they missed out on 15 years of prodigious stock gains. So that would be my answer.
The cryptocurrency market faced turbulence on Thursday, with Bitcoin dipping to an intraday low of $1,215, a 3% drop against the US dollar. Top altcoins followed suit, experiencing notable declines. Ethereum fell nearly 4%, XRP lost about 5%, while Solana and Dogecoin suffered more significant losses of 6.3% and 6.6%, respectively. Analysts attribute this volatility to reports that the U.S. Department of Justice is preparing to sell over 69,000 Bitcoin seized from the Silk Road marketplace, valued at approximately $6.5 billion. While the court-approved sale has stirred market anxiety, experts assure investors that the crypto market's resilience should absorb the impact within a week without significant long-term disruptions. Amid the turbulence, Real Vision CEO Raoul took to Twitter to provide reassurance, emphasizing the broader context of global monetary expansion and its role in past crypto cycles. In his posts, Powell likened the current consolidation phase to the 2016-2017 period, describing it as part of what he calls the banana zone. According to Powell's roadmap, the current consolidation will soon give way to Phase 2, marked by an altcoin season, where prices surge across the board. This will be followed by a final consolidation before Phase 3, when core assets like Bitcoin reach new highs. Powell remains optimistic, predicting that Bitcoin's trajectory aligns with historical trends and that higher prices are inevitable. Powell's analysis, supported by charts of global M2 and its correlation with Bitcoin's price action, suggests that while the market may see short-term fluctuations, the long-term outlook remains bullish. His message to investors: chill, it's all going to be just fine. Valhalla awaits. Do you agree with Powell's take on the bigger picture? Share your thoughts on his insights and Tom Lee's predictions in the comments below. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.